Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's April 4th, and I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Gonna apologize up front here. I'm gonna have to go on a rant. Just preparing you. If you want to fast forward through it, that's fine, because it's gonna be about politics, and I'm not taking sides here. I just can't stand any of our politicians, Democrats, Republicans. This rant's always gonna filter into big business as well, with some of the things I'm hearing out there, which is a joke. Especially lately, over the past week, it's really just hit a head. It's annoying the hell out of me, and I'm gonna say things that I'm sure that are on other people's minds that may get me in trouble. So I'm sure I'm going to get a ton of negative emails. And you know what? Fire away. Frank at CurzioResearch.com. Keep them coming. I want to hear from you. That's fine. But I have to get this off my chest. Because I'm watching CNBC yesterday. And Donald Trump's being his normal self. Tweeting, throwing out what he believes to be facts about how Amazon is screwing everyone when none of these are actual facts. Just made up stuff because he actually hates Jeff Bezos. That's what it's about. The founder, CEO of Amazon. More on that in a minute. I'll get to that. That'll be fun. So yesterday, CNBC interviews this woman. Her name is Lena Khan, who's a director of policy with the Open Markets Institute. Whatever that is. The Open Markets Institute, right? When you're looking at that, I actually went online to see what this whole entire Open Markets Institute is about. And it's awesome. So they basically promote or attack the breakup of just about every technology company that has a market cap over $200 billion. And it's just, again, nonprofit. It's a democratic organization. You see pictures of, why Facebook should be broken up, why Amazon's terrible, it's a monopoly, Elizabeth Warren is a member, senator. She's, Elizabeth Warren's awesome. I mean, if a Republican saved her kid's life, she would spin it into a negative, or how a Democrat would have done a better job saving her kid's life. I mean, talking to her is like you have a gold bug and you're telling them that they need to aggressively buy the dollar, and they'd be shaking. Like, that's how it is. I mean, no matter what, there's no convincing that person on the other side ever, which is part of this rant. So getting back to the Open Markets Institute, which I think is funny. It's like me creating a job at a company for myself, a director of policy for financial newsletter initiatives, right? Just making up and having me giving me the authority to attack everyone I don't like in the financial newsletter business, regardless of the facts, right? So getting back to Lena, because this is interesting. She gets on CNBC and she starts destroying Amazon, going after it, and she calls it a 21st century railroad. How 120 years ago, you wanted to get your goods to market, you had to ride the railroads. That's what Amazon is in retail. It's the same thing. E-commerce, they own it. It's a monopoly. And, when I look at it, if I remember correctly, the monopoly in railroads took place more in the 1800s, right? So it was a little bit longer than you say. Under Vanderbilt, where they controlled, a ton of the railroads and basically almost everything from East Coast to Chicago. Now you're looking at Amazon that has a 40% market share in e-commerce. Right. So it's, monopoly status. You're not there. Right? You just whatever. You can go on TV. You can say, we want these. I get it. Just a little bit of a difference between Amazon and the railroads. Right. In the wrong time period, you meant. So now Kelly Evans doing an interview, and they did a great job. Right. Kelly Evans, which is fantastic. And Wilford Frost is the English guy. And they were just, they obviously have a different opinion than her, but they were respectful of it and just asking really good questions. And Kelly Evans, pointed out that, hey, how is it, the railroads, which is 100%, it basically, was a pure monopoly, and Amazon's, 40% market share in e-commerce. She's like, well, it's not just that. And Wilford Frost was like, what about pricing? Isn't it better for the consumers where it lowers prices? And she was like, well, this is just one thing we look at, just price. There's so many other things. How they launch their own products, and they undercut everybody, and they do all this stuff. And, Wilford was more like, this is about capitalism and stuff like that. People argue that it's capitalism, it's the best prices. So she has an agenda, right? And she's a Democrat. And she's fine. It's a Democrat. That's whatever political party, it's fine. So Wilford actually asks her, and this is what pisses me off. because he knows she's a Democrat. And so I guess your agreement with the president on this matter, because when it comes to Amazon, how, the government should shut them down, the post office and all that nonsense. And she basically changes her tune, saying, I think the president is wrong using the Justice Department to target companies. They're not supposed to. And his tweets are extremely troubling. She starts going off on the president, even though this girl has the same thesis. She's saying exactly the same thing the president is saying. She couldn't even go on there because she's a Democrat, right? And we got a Republican president. She couldn't even go on there, even though they have the same opinion, and say that she agrees. Isn't that amazing where we are in society right now? I mean, think about that for a minute. Look at our infrastructure. Our infrastructure is terrible. We're seeing bridges fall every other month. Our water pipes are over 150 years old. And we need an upgrade to our infrastructure. Both parties campaigned on $1 trillion infrastructure bill. They both want to get it done. But because they hate each other so much, they can't do it. They can't get it done, even though they agree probably on 90% of the points of the infrastructure bill. 90%. You're going to have politics. If I'm going to vote for this, you got to give me this, you got to give me that, you got to give it. This is how this whole entire system is. But how many bridges need to collapse? How many people need to die before these guys put their differences aside to the point where they hate each other so much that even when they agree, they can't get stuff done? If you're a Republican, it's even better. I mean, what Trump is doing to Amazon right now, dominating the news with his tweets, it's a complete joke. And this has nothing to do with Amazon. It's about Jeff Bezos, right? Who he hates because Bezos owns the Washington Post that basically hates Trump, writes negative stories about him probably about 9 times a day. I get it why you hate the guy. I understand. But you're attacking Amazon and just making up stuff. I mean, look at the post office. The post office, the comments, the things that are coming out are nonsense. And first of all, the post office as a business is a joke. They don't make money because it's a government-run operation. There's no accountability. Okay, you have UPS, FedEx could generate millions in profits, billions in sales, while the post office loses money. And it's great because when you look at the post office, they lost $65 billion. $65 billion since 2007. That's a regular company. They would have had a business in 2008. No, let's keep it around. Let's continue to lose money. Let's keep doing it, right? So obviously the system doesn't work. And that $65 billion includes $2.7 billion the post office lost last year. That's a great year for the post office, losing $2.7 billion. They're high-fiving each other. Oh, that's awesome. We did great this year. Now, Amazon, other e-commerce sites account for $7 billion of the $20 billion in sales for the post office, right? So that amounts to about 35%. So you could say Amazon, probably around 20, maybe a little bit higher than 20% of that business is Amazon. Now, the post office ships about 40% of Amazon's packages, right, under a 4-year deal, where Amazon bulk delivers these packages to a post office distribution center. And the post office delivers those to your door. That's how the system works. Now, according to the Postal Accountability and Enhancement Act, this is a real law. It's illegal for the post office to price postal delivery below cost for anyone. That's word for word. Okay? That's the law. Okay, they even reiterated this last year coming from the post office. So packages they deliver for Amazon by law must cover their costs, meaning the post office does not lose money. Packages they deliver for Amazon, they're actually making money. Maybe it's a smaller margin. And why is it a small margin? Because they have to provide incentives because Amazon is a massive company, which is normal. I mean, if Amazon sets up a new division to provide financial newsletters to the world, and they came to me and said, hey, we want to do this deal. What could you give us? And my margins are, say, 20%. I would say, I'd make it up on scale and say, okay, we'll do it for 5%, 7%, but I wouldn't take a loss on it. But of course, you're going to sign a deal because you're going to make it up in volume. You're signing the biggest companies in the world. This is what Apple does. This is what Walmart does. This is how they undercut people and get the best prices because they're going to sell so much. You're going to make it, and you're going to scale your operations. But to say that they lose money is a complete lie. I mean, to actually say that, and you're listening to this and you're looking at the numbers, I mean, get the facts straight. By law, this is not allowed. And then it gets even better, when tweets come out, oh, we're putting department stores out of, Amazon's putting department stores out of business and hurting companies all around the world. And then you have Walmart, because Walmart's even complaining, oh, we're having trouble competing against Amazon. How dare you? You of all people, Walmart. You know what? I grew up for 20 years. I had to spend 4 months of my life in upstate New York. The town called Stamford. It was Stamford, New York, not Stamford, Connecticut. About 30 miles outside of Oneonta. I mean, it was hardcore country. We had farm animals there. My dad liked to go there 4 months out of the year. That was my summer break. And then we used to go back to school. And it was a mom and pop place. Everything was mom and pop. They sold all different things and supplies and farming and different things. And then Walmart came along and destroyed every mom and pop store. They put them all out of business. They couldn't match the prices. They couldn't do anything about it. You know what? And I was cool with it. I mean, I wasn't like upset at you're like, wow, you can go to one place. This is cool and you're saving prices. Capitalism. But Walmart just steamrolled the world for decades. Now somebody comes out and challenges your business model and is doing something better and providing cheaper prices, and you actually have the balls to complain? Are you kidding me? I mean, I love big business because they complain like babies when they want something, but then when they're dominant, they want to control everything. And also, I remember T-Mobile was going to get acquired from AT&T. I had to guess, like, maybe 7-8 years ago, and I don't know if Verizon was looking to buy Sprint or whatever it was, and they were going in front of the Justice Department and say, well, this could be a monopoly or whatever. So the T-Mobile, I think it was a CEO, the same CEO at the time that it is today, I'm pretty sure, gets up, testifies, says, if we don't get this deal done, we can't compete with AT&T. There's no way we compete with them. This is the only way this is going to work. It's not going to be competitive. And AT&T has this whole entire thing, which is great. This is what they do when the Justice Department, FCC, they go up there and say, this is how the customer is going to benefit tremendously. And they do it for 2 years, and then they, jack up prices and burn everybody, right? Which is normal. So the Justice Department, FCC basically shut this deal down and said, no, it's not going to happen. So T-Mobile, remember T-Mobile, they went up there, they said, oh, we can't compete. Now they have commercials, how much better they are than AT&T. I thought you said you couldn't compete. No, you're going to say whatever you want to get what you want. Just like Walmart. No, listen, we're providing benefits for everyone. You tell me Amazon's not providing benefits for everyone if we can get things cheaper? It's disrupting businesses, and it's not putting department stores out of business. They're adjusting their business models. They had a good holiday season. They're doing better. They're reporting profits. They're not putting them out of business. They're forcing them to adjust to get better, which in the end is going to benefit customers because we're going to get better prices. That's capitalism. That's business. But to go on and say Amazon is they're putting people out of business, I get it. If they, if I was Bezos, you know what I would do? I would announce today that I'm buying Best Buy and Target. You want them to worry about something? Give them something to worry about. Control the whole electronic industry and then almost destroy Walmart by doing that. That's when I could see them coming out and saying, okay, this is a monopoly. And I understand the talk about it. I get it. After Whole Foods and how they could disrupt that industry, and you're seeing a lot of companies get hurt because of it. I get it. But we're not there yet. But to say all this crap and have this dominate the news because the president has a grudge against Jeff Bezos. I mean, are you kidding me? Because I can tell you something, Mr. President, if you want to have a pissing match with someone, don't pick the guy that's worth 40 times more than you. And he's worth $120 billion, and you're looking at Trump worth less than $3 billion. I mean, pick on the smaller guys. Pick the guys maybe with the same net worth or smaller. Don't pick on the guy that could. I mean, if he pulls his account from the post office, and again, this is probably what it's about because it's a 4-year contract. It's coming up in October, and maybe you want to renegotiate, and fine, I get it. But if he decides to pull his business, go someplace else, have his own distribution center, you think the post office losses are bad now? Forget about $65 billion. It could be over $100 billion over the next 10 years. It's going to be insane. It's not there's times that get tough, and there's times to say, okay, hey, let's negotiate. This isn't fair. This isn't a time to get tough. Get tough on tariffs. I know people looking at the tariffs right now, and they say, well, Frank, this is killing the market. It's going to result in a trade war. We're not going to have a trade war. China has to come out. It was a result, these tariffs that are pushing the market down today. It's hilarious. I mean, this is the reason that the market's giving, all of the websites are giving us. Why the market's down today. The tariff, the trade war, it accounts for like 0.3% of our total GDP, okay? You're looking at negotiations. You're looking at diplomacy. China has to come out and defend itself, right? Because the U.S. can't say, well, if you don't do this, this is going to happen. And then, China and their government says, okay, we're sorry. Think about the negotiations they're going to have with every other country going forward for the next 10 years. They have to come out and do something. Okay, this is a part of negotiations, diplomacy, all this. This is normal. Okay, but the bottom line is when it comes to China, when it comes to the EU, they're going to have no choice. Okay, they're going to have to come to terms with us. They're going to have no choice. Because when you look at this, and when you look at what is going on, trade wars are going to crush the places that have surpluses. Okay, they crushed us, right? It was long ago. Well, not that long ago. During the Great Depression, you could say that was long ago. All protectionism. And that's when we had our trade war, but we had a surplus. That hurt us. When you have a deficit, it benefits you to get into a trade war. Not that we're going to get into it, but the people who have the surplus are crazy to even think they would do something like this. So they're going to retaliate. You're going to see headlines of how all these tariffs are being in place, and they're going to be very tiny tariffs. It's not going to be a big deal. This is a negotiation process. I could tell you that tariffs are probably not going to be a story 5-6 months from now. It is now, but it won't be, which is going to lead to my educational segment later, and I'll break that down because I think there's a big buying opportunity. And now I have a great educational segment, but I have an awesome interview for you today. End of rant. I won't talk about it anymore. I keep going and going and going on this. Just very frustrating when I see the president tweeting about Amazon and they're not facts. And then I hear big businesses complaining like Walmart saying, oh, Amazon's killing us and we have to do something about it when you destroyed how many businesses over the past few decades. You should be the last person complaining on the planet. Are you kidding me? Being one of the largest companies in the world and you're complaining? Give me a break. Again, end the rant. So interview coming up is going to be awesome. It's with Barry Cohen. Barry Cohen is our analyst. It's going to launch our cryptocurrency newsletter. It's going to come out next month. I know what you're thinking. Frank, you're supposed to launch this product 2 months ago. You've been hyping it up. Well, if I decided to launch it 2 months ago, you'd probably be sitting on 25-30% losses on a lot of these positions. And the reason why we didn't do this is because I give a you-know-what about you. Okay, that's why I hired the greatest crypto analyst on the planet, someone who predicted regulation in 2018 is going to result in cryptocurrencies coming down. And now we're at a level where I think it makes a lot of sense to launch this product. We're launching this product at a time, and Barry's going to go over this in an interview, where you could really make a lot of money. Not just quick, not just overnight, but long term. Because this trend's in its infancy. It gets hyped up. You're seeing a lot of regulation, which is normal. But the technologies, the things that are going on underlying or underneath the service that people aren't talking about are incredible. And there's a lot of money to be made in this industry. Your brains are going to be worried to say, wow, I wish I bought it, 6 months ago, September, November, and held it and sold it. Or even bought it. It would have been easy to sell this product to anyone pretty much 2-3 months ago. And now it might be a little more difficult to sell. But that's the way investing is. And we're just built, and our minds are built to basically buy high and sell low, which is kind of crazy. It should be the other way around, buying low and selling high, because a lot of emotions are involved. We say emotions shouldn't be involved, but they're always involved. But Barry's going to go up, give you the basics on how to open accounts, how to do things. He's going to start writing to my list. He's going to start writing to you if you're on my email list. If not, go to our website, curzioresearch.com, put your email in there. You're going to start getting a lot of free stuff from Barry, introductions, telling you exactly how to open accounts, how you could trade cryptocurrencies, what you need to watch out for, all this whole pre-launch, which is going to come in the middle of May. So it's going to be a fantastic interview with Barry. He's going to share a lot of things with you, what to expect from the newsletter, what's going on with regulation, and why he's really, really excited right now about the cryptocurrency market. And here's that interview right now. Barry Cohen, thanks so much for joining us again on the podcast.
Frank, it's great to be here. Thanks for inviting me back on again.
No worries, boss. So listen, we're going to launch a newsletter with you. We know the market's been really crazy lately, right? So being a little patient here, being smart about it. But this is kind of something you predicted. Even the last couple of times you're on my podcast, you saw a lot of regulation coming based on the contacts you talked to. And the industry you've been following a lot over the last, pretty close to 9 months, a year now, pretty close if I had to guess. But I wanted to ask you a simple question, because we're seeing the markets come down today and now in correction territory overall. Is the crypto market linked to the overall market? And it sounds like a crazy question, but over the past 6 months, it's kind of been correlated, right?
It's funny that you should say that. So if you think about markets, people typically will think of markets, what's risky, what's not risky, what's in the middle. So if you think, let's think about your money market account for a second, right? Like your money market account basically has no risk, right? So it's a safe haven. And if you go all the way onto the other side of things, like, small cap biotech stocks historically were considered, a very, very risky, right? And then there's like everything in between. The crypto market, and it's a relatively new market, is generally considered by most investors, both, individuals as well as professionals, to be more on the, higher risk spectrum, if for no other reason than just how volatile we've seen it's been, like on any given day, right? So if you think about that, when investors in general, whether they're individuals or professionals, are worried, and those worries could be for all manner of reasons, they tend to take money out of risk markets and they tend to put them into safer markets, cash or short-term bonds. Now, what you've seen is the crypto markets come down over the last, 90 days or so. In fact, I'll share with your listeners maybe a little bit of a statistic that if you looked at the total market cap of the crypto assets that exist today, and you went back and looked at just what Bitcoin's market cap was on December 31st of 2017, they're almost identical. So that's how much market has lost in the last, call it 3 months. So, the price of Bitcoin is down 46%. The price of Ethereum is down 46%. The price of, Ripple is down 76%. And in December of 17, those were the three biggest cryptocurrencies. So it's clearly in bear territory. Now, the stock market's come down too. And I do think what people confuse sometimes is the difference between causation and connection. And so why things happen and they both are moving the same way doesn't necessarily mean that they're actually connected. So if you actually looked at the math, though, between the correlation of cryptocurrency assets over the last 90 days in the stock market, you'd actually find that it's relatively low. And so when something's correlated, it means it goes near the number one. And so the higher it goes towards one, the more correlated it is. The S&P is less than 20.2. And so it's not particularly correlated. It's an accident of fate, you might say.
I like the way you put that. But you also brought up a really good point, because when I look, and this is what Goldman Sachs brought up too, which I thought was an interesting point, because they became bearish on cryptocurrencies. And overall, they're getting into blockchain and stuff like that. Just, a lot of brokerage firms, financial firms, investment firms. They're all investing in blockchain like crazy right now. But I look at the crypto market and people want to take it seriously. Shouldn't there be times where some of them do better than others? And I'm not talking about what you said with Ripple is down a little bit more than Bitcoin and Ethereum. Bitcoin and Ethereum are almost down the same much. But when they all go, it seems like they all go down together or they all go up together. And I would say Ripple might be viewed as a small cap, right? That goes down more when the market goes down, probably goes higher when the market goes higher than that. But is there ever going to be a time where Ethereum goes up 20% and Bitcoin maybe down 5% in the same day? Because these are so linked, it makes you think like anything related to cryptocurrency, it's not really based on, even if you go into the ICO market or different companies, it's not even based on what these companies do, kind of. It's just based on where you think the entire market's going to go, which is kind of strange, right?
If you think about the market, it's a very, very interesting market. Right now there are about 1,600 coins and tokens that are traded in the public market. But if you looked at the market cap of the market, which is a little bit more than $260 billion, okay, the top 20 coins represent something like 80% of the market value. So you have 20 coins that represent 80% of the market, and you have the other 1,580 coins that represent the other 20% of the market. So it's very possible, so that's a fancy way of saying that it's a very large, ultra small cap market, right? And so it's very possible that someplace in those 1,580 coins that you're going to get coins that are down 20% or up 100% at any given moment in time, because there's so much of this volatility. The market's really young. The market really started to develop about two years ago. You got to remember, Bitcoin is only 9 years old. Ethereum's only a couple of years old. And then all these ICOs are even less. the bulk of the ICO market is probably less than 2 years old. So it's nascent. It's in its infancy. Or if you'd like the baseball analogy, it's probably at the bottom of the first inning, right? And so there's a lot of volatility. It's very hard to distinguish projects are real, which projects have longevity, and it takes time. So because so many of these projects are less than 2 years old, they haven't even rolled out the products and services that they promised that they're going to roll out when they raise their money yet. So until you start to see viable activity on a lot of these platforms, you're really not going to know. Now, you can do research and you could sit down and you could look at the team, you can look at the technology, you can look at the economics that they're putting together. You could have a long checklist that you'd use in your due diligence process to try and figure out a portfolio of investments in the crypto space that at the end are going to serve you well. But at any given moment, you're not really 100% sure about which coin it is. And so they all do tend to move in tandem. They really do, because Bitcoin and Ethereum and Ripple, and again, I'll say it, the top 20 coins dominate the market value. So, and those coins tend to be fairly correlated, like Bitcoin, Ethereum, Ripple, Dash. I can go through the list. It's not important. They do tend to right now in the short term move together because they're all trying to figure out what they want to be, right? Everybody thinks that this is a finished project and we're just waiting to see what it looks like. Think about crypto assets the way you might think about Microsoft when it first started. How many new versions over the course of the year of Microsoft's operating system have come out? Now take that and then ask yourself, how many times during the course of a year does Microsoft issue some kind of software patch because there's a bug or a problem or an issue or this, that, and the other thing, and then multiply it by all those years and all those versions? That's exactly what's happening in crypto land. All of these, this is basically one large software project. And all of these projects are constantly fixing issues, constantly solving problems, constantly going through iterations. And we're really, I'll say it again, we're really at the bottom of the first inning here.
Now, for someone who's been in the market for 20 years, worked for some of the largest hedge funds in the world, I know you hate when I talk you up, but I'm not going to mention the names because you always get mad at me for mentioning names of the people you work for. But I know you've done an amazing job with all of them, and it's incredible. You have a great reputation. What got you so fascinated with this market? Because a lot of people on the outside who don't understand crypto probably say, "Oh man, it could have made so much money," and now they're saying, "Oh, that trend is probably over." But like you said, it's in the very early innings. What has you so excited? Because I know when we talk, I'm learning things from you every day because it's such a new market, new technologies are coming out, new things, new companies, new ICOs. Is that what you're fascinated about? Because I could tell how excited you are in this market and how much you're learning. But explain it to other people out there who really don't cover this market.
It's a great question, and I think there's a couple of different touch points that I would bring to it. First of all, having spent 20, 25 years in the institutional side of investing, you really can take that skill set and you can bring it to bear in this market. Like people don't think you can, but you really can. All of the skills, all of the time in the trenches, as we like to say, all the knowledge of trying to figure out what's a good business, why it's not a good business, what makes a good team, what's leadership, even how to value these things. These are all skills from my old job. But what makes it great is there's not 20,000 people doing it. There's a small cadre of people doing it. So you really get to be on the front lines of this new asset class. And I personally find that incredibly exciting. And that's number one. Number two, it's an amazing learning curve, right? I'm learning how, I'm 51 years old and I'm learning how to program computer language now because I'm so fascinated by what's going on. Had I been doing what I did before, I'd be like, yeah, I've got a bunch of guys in IT area. They'll figure out that problem. So I just think it's an amazing thing. The business models are dynamic. The governance models are dynamic. The people that are involved in this are dynamic. There's so many young people that are just so energetic, that are so full of ideas. They want to change the world. They want to make it a better place. They want to be able to deliver goods and services to people all over the world in a way that they've never had access to using this technology. Me personally, I just think that's incredible. I think it's, the number of incredible people that I've met over the last year alone. It's just, I keep on using the same word over and over again. It's incredible. So I'm a convert. I'm drinking from the fire hose. I believe wholeheartedly, this is the real deal. Prices go up, prices go down. Clearly valuations matter. You have to think through good businesses, bad business, what things are worth, why they're worth what you think they are. All of that still holds true. But this global project called the blockchain is here. It's going to do nothing but grow going forward. So it's fascinating to be involved with in the early innings, and frankly, I'm grateful and I feel privileged to even be participating in the little way that I do.
That's really cool to say. And talk about, because the last couple of times I had you on the podcast, you said 2018 is going to be, it's going to be, I don't know if you used the word rough year, but you knew there's a lot of regulation coming down the line. I mean, you have great context in this industry. Talk about why regulation is needed, because we covered that before, but now we're really seeing it to the point where if you've seen so much stuff where you've passed on white papers to me, we've looked at white papers and we laughed, right? Because we're used to investing in, maybe private placements in the equity market where they tell you exactly what they're going to do with every single penny. And you're investing in an actual company, you're getting an asset, you're investing in an asset, you're getting equity stake. And then we look at these white papers and it's kind of like, here, give us $20 million. Here's what we're going to do. I talk about the regulation and why it's needed, because a lot of people might say, it's regulated, it's going to make it worse. But actually, it seems like it's going to make it a lot better.
Yeah. So, I have two views of regulation. And one is that you have regulation that's smart. Regulation that's attempting to do two things at the exact same time, and it does it reasonably well. And those two things are, protect users, buyers, consumers, investors, but at the same time set up, the rules of the game that encourage innovation and development and investment. That kind of regulation is a win-win for everyone. Okay. I mean, and if you think about it in some ways, like the rules around the New York Stock Exchange or, the bond markets or any issuance market that we currently have anywhere in the world, while there's pitfalls in them, they're not perfect. They really have served society well for a really long time. Just think about how much capital has been raised, how much capital has been created, how many businesses have been started because of that, how many new technologies have come about because of that. If regulation didn't exist and it was and people were constantly getting blown up out of the water because of frauds and scams and misleading reps and warranties and statements, people wouldn't really want to put their money to work, right? And the cost of that money would be exorbitantly high, right? Because people would want to get compensated for all those risks because the markets are basically crazy. Well, if you could say that about the stock market, if you could say that about the bond market, you could say that about the ICO market. That regulation that is designed to help companies raise the money they need to create their innovative projects, but at the same time protect consumers from people whose interests are not really aligned with the people who are giving them money, that is really good regulation. Now, you've seen in different parts of the world, there's no kind of like global regulation, right? Different parts of the world have come at this in different ways. And some have been very, very innovative, and some have been very, very restrictive. Like, so for example, China is very, very restrictive. They basically, in many ways, have outlawed ICOs. Now, that hasn't really stopped the Chinese from investing in them. It's just from a legal perspective, that's their perspective. Switzerland, on the other hand, has embraced this, like truly embraced this. There's a city in Switzerland. Actually, the region and the city are the same. It's Zug, Z-U-G. It's both the capital of the region and the city. It is basically known as the crypto Silicon Valley. And the Swiss Regulatory Authority has created a playbook for crypto companies to raise money and innovate there in Switzerland, because they say to themselves, this This is a phenomenal technology. It brings in some of the best and brightest. We want to be part of that. Now, that kind of tech regulation, that is what we're looking for in the United States. Because let's be honest, the United States have been on the forefront of technology for decades. Silicon Valley, Boston, parts of New York, the Triangle, Houston, you name it. We have huge technology hubs here. There's no reason in the world that the United States should actually hand other people in the world blockchain superiority. So they're stumbling through it. It's not always clear what they're going to do. It's creating some chaos in the marketplace because right now people don't want to worry about tripping over a regulatory line. So what they're doing is they're saying, you know what, we're going to avoid certain things in the United States because we don't know where they stand yet. And then they go to the rest of the world and they raise money and they put their projects here, there, and everywhere. But at some point, U.S. regulators are going to create a playbook that's going to like basically give everybody a field that they understand the rules, and then we're just going to take off, right? Because we're a capitalist society. We are at our core, we are a capitalist, innovative society, and there's no way that the regulatory regime in the United States isn't going to take into account for that. It's just a matter of time.
No, it's really interesting when you look at that. And we're going to talk about Barry Cohen, who's going to, we're going to launch his product in the middle of next month. And when I look at this market right now, I just think it's a great opportunity to finally start getting into it and start looking and start educating yourself. Because like you said, this is something that's a long-term trend. This is something that's for real. You're going through regulation. You're going through a lot of bumps, just like you do with every single market. Let's get to if someone's interested in this, right? Because you say everybody knows Bitcoin. They understand, not that they understand it, but they read stories about it. They know the pricing of it. They know where it is. But most people don't know how to actually buy it. So if someone wants to buy Bitcoin, if someone wants to buy Ethereum, how would they do this? And if you could explain this, pretend you're explaining this to someone that's never bought any cryptocurrency ever, because I'm sure a lot of people are interested in it, but they're also skeptical. There's a lot of different exchanges. What exchange should they use? How could they get, where could they invest in these coins? But it's such a confusing market, I think, having people understand it would make it a lot easier for them.
Again, you always hit the high points. I should learn from you how to ask good questions. I think it's the first thing I would say is that when you first get started, keeping it simple in many ways is probably one of the best things that you could do, right? Like there are a lot of people who start off and they dive into the crypto pool and they try and be more proficient at it than what their experience is, and they end up more often than you might like to hear about, leaving with a bad taste in their mouth. So my rule of thumb is keep it as simple as possible. And there are a number of exchanges in the United States that are regulated in one way or another, usually state by state, but some are done also in a federal way as well. Now, I want to preface that I have no skin in the game. None of us at Curzio Research have any skin in the game in any of these companies that I'm mentioning. So I'm not promoting because there's some benefit to us. I mean, isn't that fair, right, Frank? We have no skin in the game on this.
Absolutely.
And so there are two in the U.S. that can take of size that can take U.S. dollar deposits, because it's critical to remember that when you first start out, you're most likely going to be moving money from your bank account into your account at one of these exchanges. And there's two. There's one called Kraken and there's one called Coinbase. Now, I'm going to focus on Coinbase because it's probably, if not the best exchange known in the world, it's certainly the best known exchange in the United States. And there's some real benefits to using Coinbase versus a lot of other ones. First of all, it is very, very user friendly for people who are first starting off in crypto. They literally walk you through step by step how to open an account, how to, they give you several different choices about how to transfer money into the account. They have tutorials that are on their website. And so it's pretty straight. So when you open an account, you go online. They don't have offices. You do it all online. You're going to need, ID, like you're going to need like your state driver's license. You're going to need, your passport. and you're going to download that information onto the website, your address and other things. You're going to go through, an approval process. When you get approved, they're going to tell you how would you like to fund account, which is, how would you like to put money in? You're going to make, there's several selections that you have. You're going to choose what you want. Me personally, I did it the old-fashioned way. I wired money from my U.S. bank account into my account. It took me, it took me 2 days for the funds to hit. Actually, it took me less than 2 days. And when the funds showed up, I bought, some Bitcoin, some Ethereum, and then from there I grew like my interests in ICOs. Now, the great thing about Coinbase is they have a subsidiary company which really lets you broaden the kinds of coins that you can buy. So like on Coinbase, they have a limited number of coins you can buy. It's like 5. But their subsidiary lets you buy like basically the menu of coins that are out there. And the great thing is that once you have money on Coinbase, you can transfer money from Coinbase to their subsidiary and back and forth, all inside of the online application. So I personally think for beginners, Coinbase is a great place to start. It's easy to get on board. It's easy to understand what they do. They've been doing it for a long time. They're regulated. And they also have this subsidiary that as you begin to grow in terms of your interest and your sophistication is really going to let you very easily start to branch out your crypto portfolio.
No, that's really cool. And is it that difficult to transfer money? And again, guys, for the crypto experts out there, we'll talk about the basics here. We know there's other exchanges out there. Maybe you can even get to some of those other exchanges where, does some of the other exchanges really offer more opportunity to buy different coins? What are listed on these things? I mean, obviously, Coinbase you could buy, Ethereum, Bitcoin, but if you want to buy, and there's a lot of ICOs that come out, a lot of tokens. Talk about that process maybe with the ICO,
Sure.
How it gets listed on an exchange, because it's almost it's similar. I don't want to say similar because it's totally different. You're not really, ICOs, you're not getting equity stakes in the company, but the way it's listed and on exchanges and stuff like that, it'd be interesting to give everyone I'm sure that's a question that I get a lot from subscribers. So why don't you explain that a little bit?
Okay, so I'm going to take that as 2 parts. I'm going to say like, okay, what are some of the different exchanges and like why are they different? And I'll now touch on that for a second, and then I'll touch on, kind of like the ICO process and exchanges and how that works. So the first part is that there's really, when you get down to it, there are 2 types of cryptocurrency exchanges. There are what's known as centralized exchanges, and then there are what's known as decentralized exchanges. And the easiest way to understand the difference with that is, in a centralized exchange, there is a company that actually acts as a custodian or an escrow account for your assets. Not that different if you think about it from Charles Schwab or E-Trade or Ameritrade or Fidelity or any of the names in standard stock investing that we're all familiar with. Decentralized exchanges, and I know it's going to sound like a little nebulous, decentralized exchanges don't really take custody or escrow of your assets. You have a coded private key account, and it kind of just resides out in the world. Now, I've used both. I've been doing it for a while, so I'm reasonably proficient at it. Frank, I would have to tell you, for anybody who is first starting or even only been doing it for a couple of months, I would really recommend staying away from the decentralized exchanges. Not because there's anything wrong with them, not because they're scammy. It's the process of managing both your assets and the account really takes a certain level of comfort and expertise. I can't say enough. I would really, really, really try and stay away at the beginning from those. I would stick to the more, kind of traditional centralized exchanges, whether it's Coinbase, Kraken, Bittrex, whatever it is, whatever someone chooses, that's what I would go with. Now, some exchanges accept what's known as fiat currency, which is, in the United States, that's our good old-fashioned U.S. dollar. Other exchanges don't accept U.S. dollars, don't accept, U.S. dollars, euros, yens, whatever. They only accept cryptocurrency. So in order to participate on those exchanges, you actually already need to own Ethereum or Bitcoin or Litecoin or Dash, and you can transfer those crypto assets onto the exchange. Again, I would say for beginners, for people who are first dipping their toes in, I would really stay away from that, because you have to buy it in one exchange and then transfer it to another and then figure out how you want to store it. And next thing you know, you're going to have like different wallets all over the place that you have to manage, different private keys all over the place that you have to manage, and different passwords. And it just starts to multiply. It's not worth the risk, and it's not worth the effort. So that's kind of like the exchange landscape, which is the reason why I mentioned Coinbase. It really kind of lets you get on board relatively quickly. It lets you get on board with US dollars. And as you begin to get more sophisticated and you want to branch out what your portfolio is, you really have the opportunity to kind of just open up an account with their subsidiary and transfer funds back and forth relatively easily. So, that was the theory. That's the thinking behind why I made that recommendation to begin with. Now, in terms of ICOs, I'm going to say that they're similar to IPOs in the sense that they're not publicly traded yet. You're giving somebody your money in exchange for tokens. Now, that's about where the IPO thing ends. Because number one is, you've mentioned and I've talked about, like, you don't own equity in anything. You own a token that has value because the platform is going to be useful to people. But the way it works is relatively straightforward. Let's say Curzio Research is gonna do an ICO. Okay, we're gonna go out. We're gonna do an ICO. We're gonna put together a business plan. We're gonna talk about, like, why we're doing it, and we're going to go out and we're gonna tell people about that. And people are gonna say, "Wow, that's really interesting. I would like to participate in that." And they'll go to your website, or they go to a website and they can read the white paper, which is really kind of like it's a marketing tool. Well, it's not a marketing tool. It's a marketing tool, and it's also a plan, right? It's both of them in the same time. It outlines what we're about, what you want to do, where you want to take it, why you want to do what you're doing, how you're going to use the money. People do that, and I always recommend people should always read the white papers. Never buy anything just because it's been recommended. Never buy anything just because it's hyped. Take the time to read the white paper, know what you own. Let's say that I decide that I want to buy a Curzio Research token. I'm going to pay for that, most likely using another form of crypto, Ethereum, Bitcoin, one of the big ones, right? I'm going to transfer my coin to you, okay? You, in turn, after you get that coin, are going to allocate to me a certain number of tokens, whatever it was. Let's say, 10,000, right? The ICO ends, and usually within about 7 to 30 days, that ICO project will do what's known as releasing the coins. And now you, as the investor in these coins, are free to transfer those coins from your own individual wallet at the ICO onto an exchange and trade them, go out and buy more because they're now publicly traded, put them in a different form of wallet, whether it's like a cold storage wallet or a different wallet. You can do anything. You just move them around any way you want, just like dollar bills in your pocket. You can give them to your cousin. You can put them in the bank. You can go buy a cup of coffee. That's kind of like the simple version of what happens. And when it comes to like getting on an exchange, it's a bit different. Instead of being the New York Stock Exchange, where let's say I want to go public, and you go to the New York Stock Exchange, you show them that you're registering, they give you a symbol, you pay some administrative fees and blah, 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 blah. Here you actually have to go from exchange to exchange to exchange to exchange, and you have to essentially request being listed. And that listing process differs from different exchanges, and they're all around the world. And some of them are really easy, and some of them are not so easy. And some of them are free, and some of them actually charge ICOs money to list. And it kind of runs the gamut. And usually you want to see your ICO on a couple of different exchanges around the world, because this market trades 24 hours a day, 7 days a week, 365 days a year. So if you have a couple of Asian exchanges, a couple of U.S. exchanges, a couple of European exchanges, your buying pool and your liquidity pools and your interest levels are going to be much higher because people in those regions aren't going to wake up at 1 o'clock in the morning to buy and sell your token, right? So they want to wake up during the course of their normal business day to buy and sell tokens. So like it's really important to kind of be spread out among the major time zones. And that's kind of like, again, like a very kind of 50,000 foot view on, how it works and why it works the way it does.
Yeah, and I appreciate that, Barry, too, because listen, there's a lot of people in the crypto markets where that segment might have been like, oh, but there's most of the questions that I'm getting too, they want to understand this market. They want to be able to invest in it. It's always hard to invest in when at the right time, right? Because people always want to invest when things are hypey, when things are great. Now when things are down, they're probably like, it's just the way our minds are built, our brains are wired. But when we launched your newsletter a month and a half, what are some of the things that we can expect? Because one of the things that you're talking about now is the educational part, where we want to have the whole education almost like in a book format to explain to you exactly what you need to do, just for a very beginner's guide. But even what else could they expect in terms of maybe recommendations for crypto exchanges, maybe stocks and cryptos and stuff like that? Because we're really looking forward to launching this. And I know you're looking forward to writing about everything that you've been learning, especially over the past 6 months, because you always call me with new things going, you're not going to believe this.
Yeah. Well, like I say to you all the time, it's drinking from a fire hose. Well, I'll tell you, there's a number of different things that you can expect. I mean, and you kind of hit on a lot of them in a way, which is we're gonna walk you through the process step by step. We're gonna take you literally from walking out of the dugout to standing up in front of home plate, how to swing the bat, and how to run around the bases. That's number one. Number two, we're going to teach you about like what these things are. Like, what is Bitcoin? What is Ethereum? How does it work? Why does that matter? Like, what do people look at? Why is this technology so exciting, so innovating? What are some of the things that we can possibly do with it? And therefore, like, why might I be interested in investing in these projects? So we're gonna kind of walk you through like, the history of these things, and we're going to walk you through why one technology works this way, why another technology works this way, the whole gamut. We're going to take you through it. We're going to teach you. We're going to talk to you a little bit about how did we get here? Like why Bitcoin? Like why did it happen? Like what were the things that came together that made this possible? Like what were the things that happened in the course of the history of money that have kind of brought us to this point? So we're going to talk to you a little bit about that as well. We're going to talk to you a little bit about what the market looks like. What does everybody knows Bitcoin? Some people know Ethereum, but after that, a lot of people don't know anything other than that, right? So what does the market look like? How big is the market? How does the market work? Who are the major players? What differentiates them? What do they do that they want to do? Where are they going? What should be interesting to me? What are some of the things that, we go into a long explanation about what is an ICO? How did they come about? How do they work? What are best practices? What are good governance? Like, how do people typically use the money how does the money move from here to there? What are some of the key things to look for? Like, what might constitute a good project? What are some of the warning signs that when you hear about a project that you should say, wait a second, that's a red flag. I'm not so sure I want to go any further. We're going to walk you through that. Obviously, we're going to be providing news about changes in the marketplace, whether it could be interesting technological developments, personnel, regulation, tax, whatever is out there that's happening. There's a lot of news flow. Most of it's garbage, so we're gonna sift through that for our readers so they can focus on the key things that matter. And then, of course, we're going to be delivering what we like to think are quality, well-researched, actionable ideas. Now, they may or may not be a not publicly traded ICO. They may be. If we find one that we like, and believe me, we're not going to just recommend anything. We're gonna have to believe in it 100%, right? Because so much of this market, frankly, is garbage, right? I mean, again, I said it, I think, on the last podcast. You have to remember the ICO market is very much like early stage venture capital. And if you look at the history of early stage venture capital, 75% of the companies that venture capitalists fund, and these are professional investors. These are people who have huge technical skills, who have been doing this for a long time, and by the way, who are fiduciaries, right? Don't forget for a second, these are fiduciaries. They've taken other people's money. 75% of those projects fail. Now, the ones that don't are just off the chart home runs. And that's how venture capital makes, kind of like 20% rates of return over the course of several decades. But you can't forget that even with all the due diligence people do, or even with all the best and brightest minds out there, 75% fails. Now, in the crypto world, there are very few gatekeepers like venture capitalists. So I think the failure rate's going to even be higher, right? So we're going to recommend ICOs where they've got the right team, the right product, the right model, the right economics, solid technology, security protocols, and most of all, the token economics make sense, right? There's no point buying a great project if you're paying 4 times more for it than you should. So, we're going to do that. And then we're going to offer actionable ideas that are already in the marketplace where, they've kind of been vetted. The technologies are further along in terms of development. We understand, what's known as price discovery, so we can understand how the prices move back and forth a little bit. We're going to be bringing that to investors too. And hopefully it's going to be world-class research that they can't get anywhere else.
No, that sounds great, Barry. So listen, I really appreciate going over everything. And again, these are so many questions that I'm getting where I think people, believe it or not, with my list and what I'm telling them is, hey, you know what? This is a time to really invest. And, look, we see the market coming down, and some people might not be as interested as they were back when, of course, Bitcoin was at 15,000, 17,000, 19,000. But when you look at this trend and you look at the regulation coming along, and what you told me about Sweden, which is new to me, or was it Switzerland? Right? So Switzerland you're talking about with the big hub? Yeah, and when you look at that and how, you look at Switzerland, and then you said how China's basically saying no ICOs, and you have another country that's setting this up, saying, hey, we're going to embrace this because this is amazing. It'll be nice to see where the U.S. falls in this. And when they do, I think there's going to be incredible opportunity, especially for your subscribers. So I'm really looking forward to launching this project. And I'm glad that you came on and explained a lot of this stuff to us.
No, it's my pleasure. I can't wait to interact with our readers.
All right, great stuff. Listen, they're going to be hearing from you. We're going to be sending a lot of stuff from you. If you're a subscriber or you're part of our list or anything like that, you're going to be hearing from Barry a lot leading up to that launch, which is about a month and a half away. We're really looking forward to it. So he's going to be writing a lot of cool things and cool stories that you're not hearing anywhere in the crypto world. So it'll be a lot of fun. So Barry, thanks so much for joining us, buddy.
No, thanks so much for having me.
All right, guys, great stuff from Barry. Let me know what you thought. Frank at CurzioResearch.com. I mentioned before the interview how we could have launched the product 2 months ago near the top of the market, generate a lot of money. There was just so much interest in cryptocurrencies. People just wanted to get in because they're seeing some crazy gains, a lot of hype, especially a lot of different websites out there and promotions, crazy stuff. Then you know what? You would have spent a lot of money to buy a high-priced newsletter, and you would have got destroyed. And then what happens? You're going to tell 50 people how Curzio's a scam artist. He robs people and beats up old women and children. The time it goes, keeps going and going and going. People just keep adding things when with those chains and things go viral and stuff like that because they just got crushed and you bought stuff at the top of the market. Instead, we want to do the right thing here. You want to launch a product like we did with Michael Alkin. And Michael Alkin's a short product, uses conservative option strategies that anyone can learn. Very conservative, aggressive. And he's making a killing. We launched it like 4 months ago, and that's what we want to do at Curzio Research. We don't want to launch products, just like ETFs. The best ETF, they're always launched at the top of markets. And then you see them come down, and then eventually you see them go back up, right? No matter what it is. It's just some hot market, and you're going to have 30 people that know they can create an ETF, and it's going to be overlapping with, their other 700 ETFs. This way they continue to charge you fees on top of fees on top of fees and make as much money as it can. Again, we all know. If you go on Vanguard and you see and punch up a symbol and see where the ETFs or the indices or anything that they're in, you'll see they're in like 40 Vanguard within the same company, right? So you'll see it's in 40 different Vanguard ETFs. So they're just finding ways to charge you. Like, we charge low fees, but, we're going to put this stock in 40 different ETFs. To charge within the same company, and it's crazy. It's all about generating fees. For us, launching Michael Alkin's product at a good time, I don't know when the market's going to kind of come down like it did. It kind of got lucky with the time of the market. But what we did know is he targets individual stock, and he's been seeing a lot of individual stocks trading at levels that they shouldn't be trading at. So even with a market that was kind of like slightly going up, and especially over the last 6 months, 9 months, he's been doing a great job. He's come on our podcast. He's given you 2 stocks that have completely crashed. He would have made a fortune through his option strategies. But now he's up on almost every one of his positions. His subscribers are happy. He's doing well. And that's what we want to do here. We want to try to make you money. And what does that do for Curzio Research as a brand? Well, when we make you money, you're going to tell a lot of friends about us. We build relationships that last for 30 years and not for 3 months. So I tell you all the time, I'm not looking to make a quick buck doing this, starting Curzio Research. You know what? I'm already rich. And I'm not talking about money. I mean, I have a great family. I have great friends. I love my job. I mean, if I died tomorrow, I'd lived a great life, traveling the world, and most important, going to Minnesota to watch the Eagles win their first Super Bowl. So now I could die in peace. But in all seriousness, I love to research stocks. The guys I hire love to research stocks. They love this. They call me all the time. They email me about different stories, different things. They're not doing this for a paycheck. They really like to do it. Of course, I got to pay them. It's a business. People got to make money and feed their families. But, we want to share that with you. So you can make smart decisions when it comes to investing that will help you retire early, pay for your kids' college tuition, or, hey, if you're a millennial out there, buy yourself a new Xbox, whatever. That's all pretty cool stuff. With that said, let's get to our educational segment. See the markets come down, getting a lot of emails. We see our portfolio, some of our stocks in our portfolio are getting hit just like the rest of the markets. It's not news generated, it's market generated. It's just coming down. It's nothing like specific. And we're seeing some areas get hit a little harder than others, right? We've seen technology. And a lot of that news from today, yesterday, maybe over the past couple of weeks is the tariffs, right? That China imposed in retaliation to tariffs. And when you look at the numbers, they account for like 0.3% of our GDP, which is absolutely nothing. Yeah, that's the first thing. The second thing is this news should have been expected. I see the market sell off on this. I mean, China can't do nothing after our aggressive response, after the president's aggressive response. Remember, the president can raise tariffs by himself. He doesn't need Congress. That's one authority he has. And you're not going to see China just say, okay, U.S., we'll change our policy and, the value-added tax and everything because we'll make it fair. No. They got to come out. They got to show faith. But right now, behind those closed doors, they're negotiating. And when you look at this, when it comes to trade wars destroy the countries that have surpluses, just like it did to our economy during the Great Depression. That's what we did. Protectionism, we had a surplus, and it crushed us. But it benefits the ones with deficits, since you're basically losing money every time you trade, which means we're in a driver's seat here. Because they really want to come out and have a trade war, which is not going on right now, guys. This is just little things. This is just taps on the shoulder and stuff like that in negotiations. But if they really want to have a trade war, these guys are going to get crushed. We're going to see the EU get crushed. We're going to see China get destroyed. I mean, these guys are nuts with the amount of money that they're making, but it has to be fair. They're basically robbing us. You can look at the numbers. Forget about what you read. Forget about, I wouldn't have handled it the way, you don't have to come out publicly and rip everybody. I just think that, it could have been handled better, but the truth is in numbers, it's a joke. And when you see, I like to get guys who are non-biased. I try to be. People are always like, Frank, you love Trump or you love this. No, listen, I tell it how it is. I tell how it is. I mean, the opening rant was all about Trump. But when you look at the numbers and you look at tariffs, we're getting robbed. We're getting crushed. And when you have a guy who's not biased with Tim Cook and Apple, and from my knowledge, he wasn't really a Trump supporter. Then with the taxes, he was like, hey, this is pretty cool, and this is working for us, and this is why we're going to invest, $300 billion in the country. But he came out and said about tariffs, he's like, we got to negotiate a little better, and it's got to be a fair system because it's not fair right now. But if you look at the numbers, if you take a non-biased, if you're not a Republican, Democrat, remember, I did the whole thing with tariffs, pretend that there's no president or whatever, just put your differences aside, because as we saw with my opening rant, even when a Democrat and a Republican could agree, they would never tell each other that they agree. That's where we are now. They just hate each other no matter what, and it's a joke. Okay, that's where we are in politics. It's terrible. Okay, even when they agree on something, infrastructure growth, they agree, $1 trillion plan, but they can't get it passed. They just can't get it passed, which is a joke. So the markets are really going down because of tariffs. I would view this as a Brexit type event. It was a big deal. It's, a shock. Holy cow. Again, I'm just comparing it as an event, not so much as the exact thing happening. I'm talking about in terms of the market. So we had the markets falling sharply, but quickly recovered once we kind of understood the implications, right? Because the markets hate uncertainty. And once we know what's happening, that's why you see with a lot of companies, when there's a lawsuit ongoing, especially if it's Apple and Samsung involved with a smaller company, It hurts the stock. It goes down. It lags. It's hard to get momentum. But once they announce that settlement, sometimes that settlement could be pretty big. That stock's going to pop 10, 15% because you remove the uncertainty from the stock. Now, people could invest in the fundamentals, invest in the growth, invest in the company without having uncertainty, which is what you have right now with GE. I mean, GE was a stock that I thought would bottom at 20. Why? Because I thought it was a kitchen sink that got thrown in. And then they come out and say, well, we have an insurance division where we haven't written a policy in 10 years that we're going to have to take a $6 billion write-off instead of a $3 billion write-off. Now it's like, what else is going on? And we just thought you cut the dividend by 50%. Now you're looking at the base and saying, okay, now I can invest in GE. You took your loss. Things are bad. Power's bad. Okay. Now you come out with something else that's a surprise. Now that's where you're losing all your investors because you think that's the bottom. So that's the way the market works. With the tariffs, with all the stories out there, there's fears. It's not trading on what China just did. It's trading on the possibility of a much bigger trade war in the future. Okay, the market looks ahead, which is not going to happen. It won't happen. It can't happen unless China wants to destroy its economy, unless EU wants to destroy their economies. It's not going to happen. There is going to be negotiation. It is going to be a better system, and they'll figure it out. Because as we're seeing other countries around the world get hurt because of this, we're going to get hurt too. Not as bad. We have a deficit, and it's better. We're going to be making more money off of this, which is fine. We can make up the difference. We have pricing power. We got strong earnings growth. We have a lot of things. Our economy is in much better shape than most others out there, especially the developed nations. But you're looking at all this taking place right now. It's about having uncertainty. And I can tell you, I don't think this is going to be a story 6 months from now. We're not going to be talking about tariffs. I think it's all going to be negotiated. It's going to be fine. China's not going to admit that they did something or that they lowered the VATs or whatever it is on certain goods. And now it's almost like the Cuban missile prices, right? Hey, we'll remove our missiles from Turkey. We're not going to tell anybody that, and we'll deny it 100%, but this is how they get deals done. But I don't care how they do it, but it's got to be a fair system, and they'll figure it out, and it'll work. I don't even think it's going to be a story 5-6 months from now. So the markets are really coming down because of the tariffs. It's a really good buying opportunity because this is a problem that's temporary. That's probably not going to exist. It doesn't make sense for it to exist for anyone, and they will negotiate because it's going to be better for all of them, and all these politicians and everybody, they're all going to make more money once this is resolved. So where do we want to look for opportunities? I've been telling you over the past few months, write down a list of stocks that go down 10, 20%. And what we're seeing is a normal pullback in the market. Is it frustrating? Yeah, it's frustrating. You see stocks go down. There's no news on it. Some of them will go down 10%. Some will go down 25%. Some will go down 15%. And some of them hold up better than others. But what I'm seeing in technology right now, I mean, people are like, well, is that cycle over? Could it be over? Let me tell you something. That cycle is not even near over. Not even close. And you look at it, smart cities, big data, Internet of Things, autonomous cars, quantum computing, blockchain technology, augmented reality. We're talking about trillion-dollar trends that money continues to flow into. And that spending's not slowing anytime soon. Doesn't mean tech can't fall further from here, right? We got some crazy momentum names, but when I look at Intel falling 10, 15%, 17% off of its highs, this is a company I've been bullish on that I like, and I liked it from a little bit earlier in here as well, because Apple says that they're not going to use their chips anymore. I mean, people are like, well, that's a big news. Apple's not a computer company; they're an iPhone company. But when I look at that news and you look at the numbers, and people say, well, it accounts for 4 or 5% of sales. It accounts for 1% of profits for Intel. Okay, it's not a big deal to Intel. Why is it 1% of profits? Because companies like Apple, just like Walmart, are able to squeeze everyone because they're bigger. And Apple has to find ways to squeeze profits and improve their infrastructure, cut costs, make their own chips, whatever they need to do, because they're an iPhone company, basically a hardware company. And iPhones, what do they account for? Pretty close to 70% of sales. And people are just, look, their old model was, hey, we'll sell a phone every 2 years. We'll sell a phone every 2 months. Now it's just selling a phone every year. Are people really going to continue to pay $1,000 to $1,200 for a new iPhone every year that basically doesn't have a lot of upgrades from the previous phone? There's not a lot of upgrades from the 8 to from the 7. Yeah, you're going to get that, but eventually people are going to say, okay, it's a business model that if you look in the past has never been sustained in history. Maybe it continues to get sustained. I know they're pushing more into services and they're doing great and they're expanding that, but bottom line is they're an iPhone company. They have to find ways to bring manufacturing in, lower costs, do everything they can to maintain those profits, because it's going to be really, really hard to continue to sell phones every single year at $1,000 to $1,200 a phone, especially their high-end phones. I just think, it's going to be difficult to do. They amazing how they continue to do it. Usually you see, costs go down eventually, but people will pay a premium for Apple products, and I have Apple products. I have the iPhone 8 Plus. I upgraded from the 6. I like it. It's great. The camera's great. I'm not going to buy another phone for another 2 years, though. So it's interesting to see, why Apple made that move. But when you look at Intel going into quantum computing, into every major trend, Internet of Things, cars, technology, the Mobileye transaction that the acquisition. I mean, unbelievable growth in this company. When you're looking at this news, being able to push the stock down another 6, 7, 8% is kind of ridiculous to me. That creates a great buying opportunity to buy a dirt cheap technology company that pays a nice dividend that has incredible growth. You usually don't see that in the technology sector often. Usually you're going to get momentum names, or you're going to get dirt cheap names where their growth is kind of over and they're just paying that dividend, like the Cisco and Microsofts before they started getting into cloud and just better big data analytics and growth businesses finally. Another tech company I like is Facebook. Facebook's trading at 17 times forward earnings right now. And that's a market multiple and growing earnings by 40%. And this is a stock that you could buy here and hold for 2 years. You'll probably be pretty happy. Is it going to be tough over the next 6 months? Yeah. Zuckerberg going to testify. Is it a surprise with all the privacy stuff? Is that a surprise? I mean, we've been talking about that for years. How don't you know when everyone's giving you every bit of information? I like this. I'm checking in here. Here's where I am right this second. And they have access to, 2.7 billion people on the Facebook platform. It's incredible. Anyway, is anybody surprised about this? What I like about Facebook is, they're taking the approach, and Zuckerberg's the type of guy is like, hey, we're going to fix this and we'll sacrifice in the short term to build a better long-term business. A lot of companies kind of finagle around this sometimes. And when you're looking at momentum stocks, guys, what are we seeing in technology? I don't want to get too long here. I know the podcast is running a little long. What do you see in technology and momentum names? When momentum names break down, it's painful. These companies get destroyed. And the questions I always ask, the mistakes I made is you try to bottom fish and say, wow, this is going to come back. Once that trend breaks, and it's not just broken because of the market, but maybe because of other things, like we're seeing with Tesla, which I'll get to in a minute. When do you buy these names again? Well, you buy them when fundamentals come back into play. So for Under Armour, well, people thought around $10, $11. That was good. Now it's trading at 16 after it came down from 40. I mean, you look at Walmart, Walmart's momentum went up tremendously, right? They had momentum. You're like, Walmart? Yeah. If you look from October to when they reported that bad quarter in January, the stock went up 40% for Walmart. It was on fire, all-time highs. And then what? They lowered their earnings. They went down 10%. They lost momentum. But going into that trend, that stock traded at 22, 23 times forward earnings. And you're looking at a stock that usually trades at 17, 18 times forward earnings. So now, because they lowered earnings and the stock came down, it's trading more of a market multiple, and it found a little bit of a bottom here. When it comes to Facebook, 17 times forward earnings, a market multiple when you're growing 4 or 5 times faster than the overall market, that's a good buy. Intel, another one. Amazon, another great stock. Yeah, headline risk with the president being personal, making up stuff, because he hates Bezos and taking out Amazon, but everything and massive growth ahead. And everything that they do. I mean, long-term cloud still, it's not even near being a mature market. Big data analytics, the Whole Foods, you have Alexis, smart homes, and we never really even get into e-commerce, which is their bread and butter, but massive growth markets that will continue. Names I don't like. NVIDIA, huge momentum name, amazing growth, but now it's trading at 30 times forward earnings, even after it's come down about 15% off its highs. And it's not just because of the market. There's analysts coming out, and this is something that I noticed, they're seeing a huge slowdown in the demand for crypto. And that was an extra catalyst for this company. Yes, they're in a lot of growth markets. But everything, for a company to be trading 30 times forward earnings, 40 times forward earnings, everything's got to be perfect. And going forward, it's not perfect. I mean, if you look at NVIDIA, the expectations are sky high. Earnings are sky high. The price targets are sky high. They haven't really been lowering them yet. It's a very expensive stock despite, pulling back 15, 20%. So we're going to need a bull market, tech to really come back to see NVIDIA maintain that growth. But if we see a stable market, ups and downs, not too crazy from here, I think NVIDIA is going to get hit pretty hard. They got to come down to a level that makes sense from a valuation perspective. And because it's not just fundamentals, but you're seeing part of the markets that added that growth. If you look at crypto was part of their growth the last 2 quarters that they mentioned. They mentioned that. Wow, there's an added catalyst. We had no idea. It was trading. It traded higher based on that catalyst. Now that catalyst is going away. You're going to see the price adjust. And then we have Tesla. Tesla popped 5% yesterday. It's down a little bit today with the market. Be careful with Tesla. I mean, I said the companies have to come back to their fundamentals. What are the fundamentals for Tesla? And they don't produce anything that's proprietary. I know this. I go to Consumer Electronics Show. I see all these cars. I mean, there's tons of beautiful cars now. It used to be Tesla, and everyone's catching up. Everybody caught up. But now you're sitting with a company with a market cap bigger than Ford, a little bit less than GM, producing what? 1/100th of the car that they produce. Your technology is not really superior, yet you're sitting on $12 billion in debt. You have $3.3 billion in cash on the balance sheet. You burned through $3.4 billion this year. They said they're going to spend $2 billion on CapEx, which is operation stuff like that, whatever. Then they have $1.2 billion in debt payments. Now you're looking at $3.2 billion with a company that has $3.3 billion in cash, and they just announced that they're going to recall 123,000 cars, the Model S, which costs money. So Tesla came out and said, we're not going to have to raise money this year. And our production schedule is online. The stock went up 5%. All right, fine. You might not have to raise money this year, but you're probably going to have to raise money on January 3rd, which is kind of the same thing. And by the way, they'll probably raise money this year. As a company, you always want to say you're not going to raise money. You never tell a market to raise money because in the shorts, you're going to get nailed even harder, even though Tesla's down 100 points. But look at Tesla. Be very careful because after that, they have another $2 billion payment due in 2020. It's a company filled with debt that doesn't really have that competitive advantage, and they don't have a lot of cash. And that's why you're not seeing downgrades, because these investment firms are going to make a fortune on these guys. If they want to be part of their capital raises. And Tesla's going to go to the Goldman Sachs or whoever who have the buy ratings on. They're not going to go to sell ratings. They're going to buy ratings. This way they have to raise billions probably. Whatever they do, whether it's debt or equity, will be interesting. So looking at the overall tech market, which has got hit hard, I'd be careful of Tesla, be careful of NVIDIA, but Intel, Facebook, Amazon, if you have like a 12-month, 24-month time horizon, buy them. It's going to be ugly on the headline front, and I get it. But these companies are trading at good fundamentals. Say, well, Amazon doesn't report a profit. They're in massive growth markets. They could easily report huge profits if they wanted to. Instead, they spend money on internal operations, all operations to build. But the markets that they're in are incredible. They're dominating. They're fantastic and continue to grow incredibly fast. So I love the fundamentals for those 3 companies. So overall, is the bullish tech cycle over? No. Again, smart cities, big data, Internet of Things, augmented reality, quantum computing, just things that a lot of those are in the infancy, multi-trillion-dollar trends. Spending's not going to slow anytime soon. And now, because of tariffs and a little political nonsense, you're going to get the chance to buy some of these stocks at a 15, 20% discount than we were trading 6 weeks ago. Okay, guys, I want to thank all of you for the kind words, advice, suggestions for my 7-year-old daughter who was diagnosed with Crohn's disease 2 weeks ago. I really appreciate it. I mean, I always consider you guys family. A lot of you reach out to me trying to get back to every single one of you. The response is overwhelming. We just spent a lot of time in the hospital with her. All's good now. She's running around laughing, not in pain. We do have changes we need to make in her diet, things like that. She's getting used to it already, but she's doing great. And thanks again for all the kind words. Also, last note here, be sure to check out my Curzio Research Facebook page. I did not post any live videos for about a 2-week stretch because I was dealing with a lot of family issues, but I posted a live video yesterday. I'm going to go back to doing at least 2 to 3 live videos every week. And we also post a lot of free content on the site, which is going to include a lot of content from Barry Cohen coming up, which is useful for people who are maybe not as familiar with our brand, want to get to know our stuff first. You see, most of this content is amazing. You're not going to find anywhere else. Providing you real-time analysis and opinions that often differ from mainstream media. So be sure to check out the Facebook Curzio Research site. So guys, that's it for me. Thanks so much for listening. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.